Cool. So it looks like we are now live. Welcome, everyone. This is Dan Hannum, Chief Operating Officer here at ZenLedger, and we are welcome to have Scott Melker, the Wolf of All Streets, here with us. Thanks for coming on, Scott.
Thank you, man. Appreciate it. Glad to be here.
Absolutely. So we have a kind of wide-ranging topic here today of, just diving into your background, your history, what you got, what got you into crypto, what you've been doing in crypto the last couple of years, and then, maybe we can tie that back into tax a little bit at the end to give a little crypto tax advice, or, for
sure.
someone who's making as many transactions as you may make. How you are thinking of taxes and how you're kind of handling all that. So,
Sure.
diving right in. I know you have a pretty interesting background. Maybe you can give the viewers and listeners some background of what you've been doing, and maybe right after like school. It sounds like you got into music, but was that always like a passion for you, or how
It
that come about?
was. Yeah, I started playing the piano when I was 4 years old, and I played classical piano competitively when I was a kid. I was just always really passionate about music. My parents said even when I was a baby, that's sort of what I was into. So it's always what I wanted to do, even though I had a multitude of other interests on the side. But I grew up fortunately with a family that believed in financial literacy and teaching us about it. I bought my first stocks when I was like 13, and I went to the University of Pennsylvania in the late 90s. And at that time, everyone in the Wharton School, it was like Wall Street was giving out jobs like Halloween candy. Like you just literally walked in and it would be like your friend who graduated the year before, who was the interviewer for Goldman Sachs. You would show up and be like, dude, get a resume. Let's do this. So I had a job offer actually at Solomon Smith Barney, but I decided to go a different route and never went to Wall Street. But obviously I had the bug a little bit from being surrounded by that for so long. But I basically, with a million other sidebars, did music for 20 years, but that leaves plenty of time to study up on the markets, to be a really crappy trader like I was, and an even worse investor. I would invest something that was supposed to be for the long term, then I'd have to cash it out 2 years later with a penalty, like all the mistakes you could possibly make. I was a complete idiot. And then, I got a little too old for DJing. Honestly, I had kids and sort of transitioned out. And that's right around the time I found crypto, which was like late 2016, early 2017. And I got lucky. I mean, that was a time when even if you were a bad trader, you just kind of made a lot of money. It was very easy. And so I caught the bug like everyone else. And then I felt the pain through those years of the bear market, although I had cashed enough out to not be too miserable. And kind of honed my chops over those years and got much better. I mean, I traded, I charted, I did all this stuff forever, but I didn't really get good at it until the last 4 years probably.
Yeah, no, appreciate you giving us that background. It's always helpful to see, where you come from, what you've been up to. And obviously I think, I definitely believe in having, as many shared experiences or unique experiences kind of allow you to look at the world a little bit differently. So I think, that music background probably gives you a different framework to view the crypto markets from. And especially, we're kind of, and we can dovetail into this a little bit later, but we're now kind of seeing the rise of NFTs and the ability for musicians and creators to now get involved with crypto. So it'd probably be cool to see some of maybe your old friends and colleagues get involved. I know you mentioned that you kind of you fell into the crypto rabbit hole back in 2016 and 17. Do you remember like what that was? Was it a friend who said, "Hey, you should look at this"? Was it
Sure.
just going online or like Twitter, or how did you actually get
Yeah.
involved?
Yeah. So the music community was kind of ahead of, as I guess they are, they're sort of technologically savvy and interested in new things. So there was like a buzz about Bitcoin in the DJ community already in sort of 2016, 17. And one of my friends who I used to produce music with just kind of told me about it. And I started testing it. And then I like opened a Bittrex account after I bought some Bitcoin. And I was so insanely confused about trading for sats instead of trading for dollars. And it was like playing this weird video game, and eventually I kind of caught on. But yeah, it was them. And then one of my other friends who is an entrepreneur, and he was passionate about it at that time too, had sort of found it. And we started trying to like surreptitiously invest in ICOs together and stuff. So it was, kind of, honestly, I think it's kind of a common path for a lot of people. I came because I heard I could make so much money. And then I sort of backed into actually understanding the importance of what I was trading, and slowly became more of a, I hate to say a maximalist, but, very passionate about Bitcoin and about crypto, and the importance of it. So yeah, I think it just sort of evolved from, hey man, you could make a ton of money, buy this, sell it more, which is what everybody was doing at the time, into, an actual passion for it.
Nice. Yeah, I feel like we definitely see a lot of people that come into the industry that are here to make, whether it's a quick buck or a long buck, but a buck in general, and trying to just make some money. And it seems like the best way to really understand the ethos behind the community and what crypto has to offer is to really get some of that financial interest and really get some skin in the game, and then start kind of diving into, what is this? What is this about? What can this provide, and things like that. So it sounds like you kind of went through that journey yourself. On the opposite side of that journey, and we'll dive into trading and what platforms you use and all that good stuff. But what were some of those resources? And maybe it was just having good friends. But what were some of those resources that really got you involved, more getting down like the ethos behind crypto, not necessarily the financial gain that you could get down? Was it just was it the experience of trading different coins and then realizing that Bitcoin was continuing to go up, or was it an experience with an ICO that didn't pan out, or were there any books or articles, or what type of like research or just resources were you using at that time to kind of get the mindset to shift from financial upside into what crypto kind of has to offer beyond that?
I mean, the crypto Twitter community was a huge part of it, as you touched on. It's interesting, I came in, I had sort of like the blue check from music. People are always like, how'd this guy get a blue check in crypto? Well, I didn't. I got it in like 2011 from being a music producer and a DJ. I've been on Twitter since before Bitcoin was invented, I think, around the same time, And so for whatever reason, that probably gave me some false credibility. And so when I started interacting with the crypto Twitter community, I lost all my music followers. I went from like 40,000 to 20,000. And then I started getting all these crypto followers. It's so funny. But so really, I think, because people knew me as a musician, they were willing to engage with me. So I was just like a fanboy of all the big crypto Twitter accounts, and I really just dove into the community. I started commenting on people's things, asking me questions, and really just, so I was just like a student who was really anxious to learn. I had a mentor, a guy named Christopher Inks, Texas West Capital. And I convinced him sort of to like start an educational course in a group, because I thought that he was providing great information. I joined paid groups. Like I did the whole thing back then, like I just went fully down the rabbit hole. I was done with music. Basically, I had time. And so, and then then I think, to be honest, when you think back about it, and it's probably the same for a lot of people, you were all about the money, and then it crashed. And then, I always joke, like you start as a trader, then you move your stop loss, and price goes down, you slowly become an investor. And then when that continues to die, you become a passionate community member, because you're basically down 95%, you're going to hold forever and try to convince yourself of reasons that you should be so passionate about this coin. I think that's how crypto winter was for everybody, right? It was like, well, now I need to find a reason to really care beyond the fact that this bubble has popped and I'm not making money. And so I think that that was probably a common experience I shared with a lot of other people. And then, to be quite honest, I mean, even after all of that, seeing the nonsense of, the global economic situation in the past year, COVID, the, stocks only go up while Main Street is suffering, the infinite money printing, all these things, anything you thought Bitcoin could be, you saw so clearly in the last year, I think. And it's probably brought a lot of people over to our cause, or at least given a general awareness of the reasons that Bitcoin is important. So I think that, like, we sowed the seeds for a lot of us, and it really was solidified in the past year.
Absolutely. No, couldn't agree more. I know you've focused a lot of your time on trading and investing. Have you gotten into any operational capacities in crypto as well? I know you mentioned Texas West Capital. Were you investing or part of that group or that fund, or has it kind of always been more of like a solo venture and just investing and then allowing that investing in that popularity to kind of grow into other ventures that came from that?
A bit of both. So it's funny, like, call me weak, I don't know, whatever. I've never been comfortable trading other people's money. I'm very comfortable losing my own money and I sleep fine when I do it. I'm not comfortable losing someone else's. I think it takes a different breed of person. In fact, my friend who originally got me into crypto, the one I was saying I was investing with, he was a professional poker player for a while, and he got backed by a hedge fund, and all of a sudden his game went to complete crap because it was no longer his money he was risking. So he said he played differently, took a different level of risk when he was playing with other people's money as opposed to his. So Texas West Capital, we have a proprietary fund. Chris primarily trades it. I, maybe would offer ideas and stuff, but mostly his, and I participated, but I was mostly more on the like educational side and helping him build that side of the business. As a trader, it's always been heavily retail, and then I slowly shifted from less aggressive trading far more to investing. It's funny because I used to joke that I was only a chart guy and stuff, but I think fundamentals have become increasingly important in crypto, which was not the case when I started. And so now I really I try to take meetings with every single new project that I hear about that's coming out. Luckily, I can do that because people will answer my DMs, or I know somebody who knows them, and I try to get in more of like an independent VC kind of for a lot of projects and things, which I think is pretty exciting. And I think there's a lot more money to be made there. I also I invested in a company called Valkyrie, which has filed for a Bitcoin ETF and is starting a trust, sort of a Grayscale competitor, which I'm super involved in and excited about. And I've been working on that for a few months. Yeah. So really just trying to put my money to work sort of more infrastructurally. And I just haven't been trading that much. To be honest, my feeling, I was trading so aggressively through the last 3 years, and we all know the tax implications of that, A, and the stress implications of it, B. But I feel like for anyone who's been here, we did all that so that we could sit back and enjoy what's happening right now, right? I accumulated all this crap while it was cheap. Now is the time, I don't sell Bitcoin generally but all the other stuff I've accumulated, I'm more of a seller than a buyer at this point. It's just because if I'm up 30x on something, I don't really care where it goes, man. I want to go live my life, so it's a bit of both, but I'm not day trading right now. For the first time, the last few months, it's really been I'm sitting back and just, refreshing like everyone else and kind of laughing,
Yeah, no, good perspective to have. And quick disclaimer as well. We do have, we'll probably spend the last, 10, 15 minutes on doing some Q&A with Scott. So there is a chat functionality here in the webinar. So if you have any questions, comments, if something resonates with you, or you want a little bit more information, or, you just have a question, feel free to put it in the chat box. And then we'll do a little Q&A at the end. So just wanted to put that out there. No, I mean, I definitely agree with you on kind of that transition from getting in early, having some of your bags inflate a little bit, and then being able to kind of diversify and look at other opportunities. When you look at investing now, and you mentioned Valkyrie, are you looking more on the traditional equity side than on the token side? I know you mentioned not really doing much day trading per se, but are you looking to kind of diversify some of those gains you've made through trading into equity plays, or kind of just sitting on not cash, but sitting on USDC or USDT, or how does that kind of portfolio construction look like?
Yeah. So it's funny. If you'd asked me in 2019, I would have said, and I used to, because people would ask, I'd say 5% crypto is my maximum. This is still really speculative. Beginning of 2020, 10% crypto, whatever. By June, I think people should be 20% crypto. Now it's I'm not rebalancing, and so it's more than 50% crypto, because I just think that the world has changed fundamentally. That said, when I'm selling, it's out of the market. I'm taking it out. Recently, I had taken a lot towards the top. So I took 25% and have been buying Bitcoin again just to get back into more Bitcoin. But in general, I take it out in USDC and I park it. I take a certain amount out for taxes. And then the rest of it, I park, in USDC for interest on, Voyager and BlockFi and these platforms. And it's insane, gaining 9% interest. There's limited but associated risk, I'm sure. I'm not naive to believe that nothing could go wrong, but I take what I'm comfortable with. And, it's like the old model that you used to do in your bank account when I was a kid. You get 9-10% interest just holding a savings account. That doesn't exist anymore. So I think that that's a huge, and you don't have to go down the DeFi yield farming food coin rabbit hole to be able to earn incredible yield. Maybe people don't think 9% is a lot. To me, as a kid born in the 70s, it's a mind-blowing amount of money to make compounding monthly, especially, So yeah, for me, profit taking means to USDC, not to Bitcoin anymore. Like I'm getting it out of the market just for some sort of rebalance. I take out 40% of everything to cash for taxes, even though that's a slight overestimation. You never know. And the rest I generally park and sit in USDC for interest. And then when we get a big dip like this, I mean, then I'll put a little bit of it back, but only into Bitcoin, and then ride the cycle again.
Makes sense. I know you mentioned a few platforms that you're using specifically around interest. Maybe we can dive into that a little bit. When you first started in 2016, 2017, you mentioned Bittrex. Was it more on the centralized exchange side? Was it like the Bittrex, the Binance, the Coinbase?
Yeah, because that's the only place you could trade back then that I was aware of, certainly as an American, and that's even shady, right? So Bittrex was fine as an American. Binance was always gray, but I traded on Binance for years before I finally got the hey dude, 2 weeks letter, and I was like, yeah, I don't really want to lose. And I actually went through being deplatformed on BitMEX and losing my entire account. Like just they wiped it, like liquidated it and said sorry, and I could never get back in touch with them. So because I was American and they busted my VPN or something, this was in like 2017. So I learned to be compliant really, really fast. So at this point, it's very limited options that I'm comfortable with, but I love DEXs. So I trade a lot on Uniswap, Matcha, like I use a bunch of them, honestly. But largely I do most of my, certainly with the big name coins on Voyager is where I primarily trade, because they're a broker. So they find tons of liquidity. They source the best price. There's a slight spread, but also while you're trading, you're earning interest. And that's the only place that's really like that, right? Like on Bitcoin and USDC, I'm earning interest as I'm trading. So when I'm in and out of them, there's just interest accruing on it. So I find that to be just an incredible advantage.
Absolutely. And, we're definitely big fans of what Voyager's doing, and actually just had a Voyager integration a few months ago. So if you're listening to the webinar and you're using Voyager, we can easily help you out with not only your interest, but any capital gains that you're making from trading as well. I guess diving into the Voyager rabbit hole a little deeper, there definitely are a few different competitors in that realm, whether it's a Voyager, a BlockFi, Nexo, a Celsius, things like that. When you looked at some of the other options out there, was it just like a yield for you? Was it yield and customer support? Was it the brokerage? Was it, what kind of made Voyager stick out versus some of the other interest-bearing options that are out on the market?
Well, to be totally transparent, I use them all because I believe in eliminating counterparty risk. So you just named 4 companies, and I have exposure to all 4. But Voyager and BlockFi being the largest 2, because those were the first. And Voyager, like I said, for me is a trading platform and offers all of those sort of crypto banking features. But I met the Voyager team in Vegas at World CryptoCon, like within months of their product launching. And I was just utterly sold on it. I loved it. So I started working with them. Sort of like I've talked to you about ZenLedger, right? Where I'm like, it wasn't a business conversation per se. It was just like, I love your product. Let's talk about it. Let's use it. Help me through. I ask a lot of questions. So, I can be very demanding. And so then eventually when I launched a podcast and stuff, they came on as the first sponsor. But this was months after I had been like just a huge evangelist for their product, because I loved it. It was Charlie Shrem and I basically were like, they're the 2 dudes that were just absolutely loved it. And so like I became very close with their team. I became close with the CEO, Steve, went further down their rabbit hole. And Steve was like, the guy's the ex-CEO of E-Trade. Voyager is a publicly traded company on the Canadian Stock Exchange. You know how many like scams and kind of like, gray area platforms there are in this space. I just feel very comfortable like having my money parked with them. And frankly, I have access. Like if a transaction didn't go through, which never happens, I would like literally call Steve and be like, hey, man, what's up? So that's a huge advantage. But honestly, I love all those platforms are unique and excellent in their own way. Just as a trader, Voyager gives me a little more flexibility than the others do. BlockFi feels more like a bank, which is good. Like I feel very secure. I love their whitelisting feature. When I did get SIM swapped last year, they like locked my account down super hard. I had to go through video conferences and holding my ID, and I know them literally. I'm like talking. It's like me talking to you, but I'm proving myself really. So they were incredible. So security is big to me. Celsius has some incredible product at really high yields. Now Nexo is launching a full exchange. I think they have like 68 coins that you can trade on Nexo live on Nexo Exchange. And so they're all great. Honestly, it's a matter of what you like and what you're comfortable with. And I think they all have benefits,
Yeah, no, I appreciate you giving that rundown. So I think that's, we definitely sit more on the tax and accounting side, but we frequently get asked, from our customers or prospective customers, like, what's a good exchange to use? Are they trustworthy? Are they, what is support? What does the security look like? Are these people that I want to be doing business with? And as you can imagine, we typically, like to have people kind of come to that conclusion on their own and not really, we don't try to steer someone in one direction or the other. But I think someone who's been there and done that and used these platforms and have some experience, trading some activity or depositing funds on them, I think it's helpful for our audience and your audience to kind of get a little bit of a background view on, what are the differences, what are the similarities and things like that. I know you mentioned, within the last year and a half or 2 years, getting more heavily involved with like DEXs. Well, do you remember like what the first DEX you used in?
Uniswap.
Uniswap.
Yeah, I mean, Uniswap was kind of the first and heaviest. I found it a bit confusing at first. I'm in my 40s. I'm not exactly a spring chicken with the new tech. And I found it amazing once I kind of got a feel for it. But Uniswap is extremely basic. And, I think that now others are going to kind of supplant them to some degree. I would imagine. I mean, we've already seen PancakeSwap. I mean, the name PancakeSwap, but that that somewhat was doing more volume than Uniswap in the past few weeks, to my knowledge. I know that one day when I looked at it, it was like 1.8 billion on PancakeSwap and 1.2 on Uniswap. And then, I started testing Matcha, MATCHA, which is Ox protocol. And you can do limit orders on there. So it's like Uniswap, but you actually can set an order. So like if price drops, you catch the price. And that's something, Uniswap is everything's a market buy. Right.
Yeah.
And I think that we're going to start to see those centralized exchange functions that we like, the stop losses and the OCO orders and all those things starting to appear on DEXs as well. Paraswap's another one that I've just been testing and looking at. Linear finance. I just see like I really try everything.
Yeah.
As you can tell when we talk about it, but like, and I think that they're all going to compete and they all will have their benefits. But I do think that's kind of the future to some degree. I mean, that said, it was really awesome until gas fees were like $300 a transaction.
Yeah.
There was a week where I was spending a couple weeks where I was spending probably 5 figures in gas, in a week. Just because to do a couple $1,000 transaction could cost $300, but you had to do it. So I did it,
Yeah.
So I think we're very, very much in the infancy of DEXs, but that it's really, really exciting for the future because I mean, that's the decentralization is somewhat what we're here for, right? I mean,
Yeah, definitely think the competition that we're seeing in the DEX space or the AMM space is really, will continue to provide end consumers with better products and better services moving forward. You mentioned competition, like even having a sushi swap come out and kind of vampire attack or fork the protocol. We saw a lot of volume, switch there overnight. For PancakeSwap, correct me if I'm wrong, but it's on Binance
Smart Chain.
Yeah. And with that, I believe the fee structure is definitely a little bit different than on Ethereum.
Exceptional. It's way lower. Theirs is it's nominal. I've only actually used PancakeSwap once or twice, but it was far cheaper. But obviously you have to hold BNB. Binance Coin is basically effectively is the Ethereum of Uniswap. You have the Binance Coin being so you pay gas fees and BNB. That's why we saw BNB going so nuts lately, right? It had this like hundreds and hundreds of percent appreciation because I think to be a validator on Binance Smart Chain, you have to stake BNB. So obviously that's, adds some supply shock or at least a reduction in supply. And then you have people having to buy BNB for fees, but the fees are nominal compared to Ethereum, not even close.
Yeah. Do you think on the execution side as well, do you think like pretty much the same type of execution, same type of, wait times and things like everything's the same. It's just a little bit cheaper.
I think faster. Faster and cheaper, both faster and cheaper. Listen, I've gone on Uniswap. I don't know if anyone else had the experience where the transactions fail over and over and you still pay.
Yeah.
Like, oh, my failed transaction just cost me $169. Cool. Let me do that 3 more times. Oh, it's $1,000 for me to make this trade. Like, it's insane.
Yeah. And I know you've mentioned kind of having, with some of the prowess that you have. And I think, frankly, being able to share your experiences gives, more credence to what you're doing. Do you have the same types of connections with like Hayden and the Uniswap team? Is there, anything out of Uniswap V3 that kind of excites you or anything that you think
I'm just a
will
user.
challenge? Yeah.
Honestly, I'm just a dude who was like, where can I trade these coins? And I went on Uniswap. Them, I've never even reached out to or talked to. I think it's an incredible product, though. Yeah, I think they're cool. But I have talked to Paraswap and Matcha and those guys, all of them, sort of to see, because I have a very good feel for Uniswap, I think, and I know, and I would imagine that they're gonna add those functionalities that the competitors are adding as well, right? I
Yeah.
mean, I don't think they're, but no, I would love to actually talk to them. But I use it every day.
From a new user perspective, and I think that's something that we've gotten in crypto, for the last 5-6 years of how do we get fresh blood in and what's like the easiest way to get in. When you look at like a Uniswap or a PancakeSwap, what do you think is actually easier for someone who's never been in crypto to use? Is it easier to explain how to download MetaMask, set up a MetaMask wallet, understand gas fees, and get through to Uniswap? Or is it easier to go the BNB route, stake some BNB, then get into BSC, then like,
I think it's easiest, unfortunately, I think it's easiest to tell someone to go open a Coinbase account and buy some Bitcoin and not touch it, right? Because it's familiar to them if they've ever signed up to an app or opened a bank account or any of those things. I think that even taking the next step beyond centralized exchanges to DEXs is exceptionally complicated.
Yeah.
Like even I remember being like opening, I think it was a MetaMask or something years ago, and trying to send something. And then I was like, it didn't work and it kept failing. And I didn't know I had to have ETH in the wallet for like it to work in the first place and all these things. It's not like there's a simple instruction manual. And even if there was, most people wouldn't understand the language. So I think that it's just like, it's a step 2 of crypto engagement for someone who comes in, they're just not going to, I feel like it's kind of easy for us and we take for granted that we understand what all of this is, but try explaining Uniswap to someone who's never even bought Bitcoin.
Yeah. Yeah, no, fair point. I mean, I think, with the DEX side of things, it's definitely more imperative to get involved with probably a centralized exchange first, really start, taking the early step of even custodying your own funds. MetaMask is kind of that next step, but, even getting like a Trezor and sending 0.0001 Bitcoin from, your Coinbase account to your Trezor and then back and just seeing how that works and making sure that you're entering the right address and, making sure that you do that with very small amounts. So if you don't,
you can get scammed so hard. Like, I mean, at Uniswap, if you used to Google Uniswap, there'd be like 15 fake scam links before you got the real one, right? So it's always checking to make sure it's the right link and bookmarking it. And I mean, I think that crypto, we take for granted because we're comfortable with it. I think it's a really complicated for a lot of people.
Yeah.
And I don't think it's like, it's as obvious as we probably think all of this is.
Yeah, no, I agree. I mean, I think that's the cool thing with MetaMask is, I don't know if you've seen it recently, but I think when they launched the the fee structure within MetaMask, and we're able to kind of, gain revenue in that way, it seems like they've been able to build up a little bit more of a staff and a structure and support and things like that. I've definitely seen more recently that they'll alert you or notify you if you're using a potential link that's not valid. So if you're looking to get involved with, whatever next protocol is coming on board and it's a .io and you type in .co or something like that, it'll say, hey, like this is most likely not that. Yeah. So it's cool to see that there's
great.
At the end of the day, it still should be on you to kind of figure that out. And that's one of the tough parts about crypto is, that self-sovereignty and be your own bank comes with being your own bank. There's no
it's terrifying
customer support line to call and say, hey, reverse this charge, or I didn't make that.
I told you a friend of mine who actually has been around for a while got scammed for almost $1 million 2 days ago, just in one of these scams. So yeah,
they're out there. I mean, it's we definitely see when price goes up, we see the Facebook impersonators, the Twitter impersonators, and then just the Telegram links of send something here and I'll give you X, Y, and Z. Or
that's basically
the comment section on your own Twitter of people coming in and saying whatever, Elon Musk sent me 2 Bitcoin back because I sent him 1.
Well, what's crazy is now the scammers are all my own face. So like the new thing is not even like just scammers being in the comments. And I've been getting DMs from people like cursing at me and screaming at me for hacking their accounts, because it's real accounts that are getting hacked. And the hackers are putting people like mine or Elon Musk or whatever, whoever it is, our own face and bio in there. So the people that got hacked literally thought I hacked them to try to scam people. I'm like, no, somebody's hacking you to impersonate me. But like, that's what I'm dealing with on a daily basis. It's crazy.
Yeah.
So if you go into my comments on anything, you see comments that look like they're from me back to people asking them for money on every tweet.
Yeah. Probably a good idea for everyone listening. If someone says that they're going to send you more money than you send them, it's probably never going to be true. I like the analogy you made
2 for
earlier
1.
on no one's going to ask you for their ATM card and say, hey, I'm going to put money into your account for you. And
That's what it was. Yeah.
They're not going to say, hey, send me 1 Bitcoin and I'll send you 3. There are services, like we talked about, like a Celsius, a BlockFi, Nexo, where you can, stake your holdings and then earn interest on them. And, they are lending them out most of the time to other more professional and institutional investors that are then using those funds. But it's a little bit different structure than, sending an address to some avatar on Twitter and hoping that you get your money back. So, we definitely see when the price increases, the scammers come out and they come in full force. So
we used to call those scams send a rack, we'll send 2 back, or send a stack, we'll send 3 back, or whatever it was.
It gets more and more like interesting, each year. It's like I feel like we started in 16. That was, we had scam A, B, and C. Then BitConnect kind of happened, and then we just as the market continues to evolve, we
rug
see
pulls, the whole DeFi summer of rug pulls last year. Yeah, they'll find a way. They find a way. You gotta understand what you're doing.
Absolutely. Yeah. We talked about how the crypto market allows you to, make a decent amount to a lot of amount of money in a very short period of time. But, the flip side of the coin, no pun intended, you can lose it just as fast, send it to the wrong address or making the wrong decision. Well, sweet. No, I appreciate you coming on and, sharing some of your thoughts and wisdom. I guess, we just kind of touched on new entrants and getting people onboarded and things like that. I know you mentioned Coinbase and just getting set up with Bitcoin. That it seems kind of like the number one step for most people to use is just, get in there, get a little bit of financial interest in there and then get started. What do you think is kind of the best, step 2, 3, 4 for an average investor, an average trader that's just getting involved in crypto? Like I just signed up for Coinbase. I just put in $50. I have a little bit of Bitcoin. What am I doing next? Am I immediately going into trading? Am I going through like a Coinbase Earn program and trying to learn a little bit more and also get paid for that? Am I using a Celsius, a BlockFi, Nexo, a Voyager, immediately? Or once someone has a centralized account and maybe a little bit in funds in crypto, what do you think is kind of the best next step for them to continue down that rabbit hole and explore from the financial perspective?
Sure. Well, first I should say I actually think Coinbase is trash. And so it was probably not the best example, but I just think that that's sort of the universal example if you're American. And because even in New York, you can use Coinbase and you can't use Voyager or the other ones. But generally I would say Voyager. I think it's simple. It's an app. That's where I've sent like my family members who wanted whatever. And because you can buy there and earn interest, as I said, it's like easier there, I think, to just sort of sign up and then you can leave it. First thing I would say to do is if you go on any of these platforms and buy Bitcoin is to immediately get your security straight, right? Make sure that you have proper 2-factor authorization, never SMS authentication, only 2-factor with a Google 2FA or something like that. And, if the platform, like one of the things I like about BlockFi is they have whitelisting, as I told you. So what that means is unless you add an address to the whitelist, nothing can be sent out of your account, and funds can only be sent out of your account specifically to the addresses that you have included. And it takes a week. So if you just go on your BlockFi account more than once a week and check that no addresses have been added, like even if someone hacked you, they would have to add an address and wait a week to be able to send funds out. So things like that, I would say security is first. That I know that's not what you're asking, but I think it is the most important thing. After that, I would say if you're new to it, you should just take yourself out of the equation completely. That's probably true for years, and decide how much of whatever you want to buy. Say you have 10 grand and you want to buy Bitcoin. This is not financial advice. This is how I would do it. I would say buy $500 of Bitcoin a week on Monday at 9 a.m. without looking at the price or thinking about it. Set it as an automatic buy, dollar cost average. Don't even think about it. I mean, I literally have processes in place to buy. I buy Ethereum and Bitcoin every single day in tiny amounts, like rounding up with Roundly X, which is a company that's awesome, and Voyager. They're connected. So every time it gets to like $30, rounding up my credit card purchases, it buys Ethereum, buys Bitcoin. I even do those tiny things. And I'm also actively like, I buy a Bitcoin every time there's a dip. Like I just, but in general, I would say you don't need to go further than Bitcoin and maybe Ethereum if you're new. As exciting as it is and seeing all of it, most people just get rinsed, like trying to touch all this stuff, or they don't understand that they're actively losing their Bitcoin trading these altcoins against dollars. Like, I haven't lost any dollars. It's great. But yeah, if you had just sat in Bitcoin, you'd have twice as much money. You know, I think that interplay is very complex. So I would say, as exciting as it is with anything, like with anything else, just do it really slowly. Like you're not doing it to make money in the next 2 months. For me, I'm buying Bitcoin for my kids. You know, like I really believe this is a 20, 30-year investment. And so, you know, don't sit there and stare at your portfolio and say, I lost this, I gained this, I lost, you know, just take it as any investment. Check it every, you know, couple of weeks, rebalance. And then, you know, then you go down the security rabbit hole, depending on how much you've invested, and realize maybe I want to get this off an exchange. And then you start thinking about wallets and all those things we sort of touched on. So, you know, there's quite a lot once you really get going. But at the very basic level, I think round one is buy some Bitcoin. Round two is start to figure out how to add to that stack and where to put it. You know, and then round three is maybe I'll start investing in some other coins once I've done really solid due diligence. But in general, I don't think anyone should just be a trader. You're just going to lose money.
Yeah. No, I think that's great advice. And I know we touched, you know, on security and, you know, setting up 2FA and things like that. On the custody side, are there any suggestions that you have, you know, for the average user, whether they're new or maybe a little bit more experienced? You know, we frequently hear that not your keys, not your coins. You know, get your coins off centralized exchanges and then get them onto, you know, a hardware wallet or things like that. When do you feel like that's kind of like the right move to make? Is there a certain dollar limit? You know, like if I have
that's personal, I think. I do think that is, but I think that dollar limit is different for every person. So I'm friendly with Jameson Lopp, who owns Casa, which is a multi-sig. And he is obviously like a Bitcoin OG. And I had him on my podcast and asked him all these same questions. And his answer was basically that you should approach your security as if the value of what you're holding is 10 times what it is now. Basically, you want to have your security scaled to what you think the future value of your holdings will be and not to what they are today. So if you have $100,000, you should be treating it, what would I do if this was $1 million? You know, if you have $1 million, you say, what would I be doing if this was $10 million? Because it could be. And we just saw that. I mean, people, you know, 10x'd in the last year, certainly. So I think that there's like a progression. We've all seen it. First, you start with the exchange. You don't even realize not your keys, not your coins, right? You just think you bought stock. Your first person is like, they think, you know, which by the way is not yours either, as we learned on Robinhood, but that's a whole other conversation. Yeah. And then it gets to being an amount that you're like, you actually want to protect it. And that's when you sort of go down the hardware wallet rabbit hole, I think. When you say, okay, I'm going to like get a Ledger, a Trezor, one of the, you know, SafePal or Ngrade, whatever wallet, and I'm going to understand this. And then you start to realize, oh, well, crap, I need to like figure out how I'm going to protect these keys. Do I split them up? Do I put them in a safe deposit box? Do I share them with someone? You know, and that, so you, as he pointed out, the minute you decide to take the self-custody option, which you should, your wallet's secure. You are not. You are your single point of failure is the human being who loses their keys or who gives them to someone or who puts them in an insecure place, leaves them on their computer. So you need to really be sure that you're willing to take that responsibility and do it. And then I think from there, you go down a much deeper rabbit hole. Like for me, where it got to a certain point, I was like, I don't want to hold this on a ledger. Like, what if I'm an idiot? Like, what if I die, you know, or like whatever. And then that's when I called Jameson and I went full 3 out of 5 multi-sig, you know, so I have a percentage of my coins earning interest, but I would never have all of it. Because like I said, there's counterparty risk. Like they could get liquidated on their loans or something. Who knows? We've seen it, you know, it's happened. And so I don't think that will happen. They all survived when Bitcoin went from 10,000 to 3,000 in 2 days.
Yeah.
If they can survive that, they should be able to survive anything, but it's a bit scary. And so the rest, like what I view as my savings account, my trust fund for my kids, what have you, is in multi-sig. And that's a 3 of 5 for people who don't know what that means. That effectively means, so you all probably know what it's like to have one hardware wallet, right? You have your Ledger, whatever. This is basically, you have 5 of them. So you have your phone, which is one, and then you have 3 Trezors or Ledgers, and you throw away the private keys. They're actually a point, which scares people, but this actually is a point of failure. And then Casa is the 5th one for a real explosion, but they don't have access, but they hold the 5th one. And you need to be able to sign on 3 devices to send Bitcoin. So you geographically disperse the other 3 you control. One's in a safety deposit box in this city, one's in a safety deposit in this bank. And I need to physically go to 3 of those locations. I need to get into an email address that has 2FA on it and do all these things to sign the transaction to send any Bitcoin. So it requires 3 devices that are locked down in 3 locations that all have separate protections on them for me to send the bulk of my Bitcoin. And yes, that sounds absolutely insane, but I've had people threaten me. I've had people do crazy things. Like if someone comes in my house, the point is I had to make it so I can't get my Bitcoin. That's really what I'm saying here. I made it to the point, like, even if, like I said, if they were sitting here and said, send me your funds from BlockFi, I would say, okay, add your address and call me in a week. Yeah. Because I can't send it. Right. So you have to put those protections in place. It's insane, but.
Yeah, no, I mean, I think that's super helpful and valuable. I think that's always a question that we get as well is, how do I, I've put some money in, whatever dollar amount that may be, but then once I have money involved, how do I keep my funds secure? How do I keep, them safe? And then how do I think, long-term, whether that's an inheritance plan or whether that's just long-term storage, and like, the Casas, the Unchained Capitals, there's now companies that kind of provide these services for you, which is nice compared to maybe 5 or 6 years ago when there wasn't as much clarity on, what you can do long-term, and how to get from a simple, Trezor or Ledger or Keep Key, et cetera, into something that's a little bit more safe and secure. So I definitely appreciate you going into some of that. I think that those are some of the main topics that we get is, security, custody, trading platforms, venues. What should I do? How should I do it? And obviously, this is not financial advice on either of our parts. It's definitely, it's one of those journeys you kind of have to walk yourself and kind of feel what's right for you, what dollar amount feels comfortable for you, your risk tolerance, and any type of other factors that can come into play. I guess the one thing that we touched on briefly, and obviously, a lot of our viewers that are on the live stream now and viewers that will be watching this later on, maybe hear a little bit more for the tax side. So I know you mentioned, every time you trade or, after X amount of gains, you'll typically take some off the plate and put them away for taxes. When you're looking at taxes, how does that impact your trading? I think something that we used to get all the time when we first started back in 17 and 18 was, well, I never sold any crypto. I've only made crypto to crypto transactions and they're like kind exchange. Yeah. Yes. That is not how crypto taxes work. So, as a quick tutorial or 3-step overview for some of our listeners, the 3 main buckets that you'll run into is really, dollars into crypto, and that's a non-taxable event, and that's why you hear, dollar cost average into Bitcoin, don't trade, hold, and, typically you'll see a nice appreciation in your Bitcoin and in your fiat, representation of that Bitcoin, but then you also not incur many taxable events. So that first kind of bucket of fiat into crypto, non-taxable. Any crypto to crypto, you'll always see a taxable event. And that, that goes for stable coins. So Bitcoin into USDC, USDC into USDT, even though they're technically supposed to be stable, you'll see a little bit of a price variance most of the time, especially on the USDT side. And then the last kind of bucket is crypto back into fiat. So when you look at, being a trader, and I know this is maybe a couple years ago where you're a little bit more deeper into trading, but was that something that was really top of mind or top of focus of, I want to make a lot of money, but I want to do this compliant and I don't want the IRS to come calling. So what are some of those kind of tips or tricks? Was it using like an Excel sheet or Google Doc for you? Did you go? Yeah,
you guys use ZenLedger. And I've used a few, honestly, because like I like to have confluence, just like I trade on 4 places. You know what I mean? And to be clear, we're talking about years ago. Last year, I had 11,000 taxable transactions in 2020. Because what people also don't realize is if you take a trade on Binance or something, and if you're trading with any size, it can be 30 fills.
Yeah.
Right. So you can put one market order, but it can fill at 30 different small amounts and others. And each one of those is a taxable transaction. So it's physically impossible to get it down to the like granular level accurate without a platform like ZenLedger. It's just impossible, right? I couldn't record. I would never do it. I would never take a trade again if I didn't have a platform to handle taxes, because it just wouldn't be worth it. In 2016 and 17, people believed, myself included, that crypto was not taxed. Everyone came and they're like, we're making all this money and you don't even have to report it for your taxes, dude. It's crazy, right? That's what we thought.
Yeah.
Wrong. But what people need to realize, as you said, every time you take a trade, every time you buy a cup of coffee, anytime you do anything with your crypto, you're selling it, right? So that's what the government views as a taxable transaction. They don't see it as money. Therefore, every single thing you do with it is taxable and you need to track it. It's impossible in the United States.
Yeah.
I'd say in the United States. There are countries, I mean, Portugal basically has no taxes for crypto. I know France, I think it's dollar in, dollar out. There's a lot of places like that. That's how Forex is treated. That's how I believe crypto should be treated personally. I think what you do in the ecosystem should not necessarily be taxed. If you take your dollars out, you owe your taxes. Totally fair. But how I approach it is that, first of all, I'm always sort of doing the calculation in the back of my mind, like, if I'm selling this to buy because, and I want to own it, like if I'm selling this because I think I'm going to buy back 10% cheaper, is that really worth it? If I'm going to pay 37% taxes on the sale in the first place, maybe I'll just skip that. Right.
Yeah.
You know? But like I said, and I had a friend in 2018 because of 2017 who didn't know that he was realizing all these gains from trading altcoins. And he never sold anything. And it came to tax time and the market had crashed and he owed like $300,000 in taxes and had like $150,000 in his account, in his portfolio. So he had to sell everything he had in crypto and come up with another $150,000 to pay $300,000 in taxes that he never realized on gains he never realized. The implication there is you'd be paying $300,000 on taxes on the $1 million you made. So you'd have 700,000 left. But because he didn't sell when it was high and waited, and then crypto was all, and then, you know, Bitcoin was down at like 6,000 or whatever it was by that time, he got absolutely crushed. So when I heard about that is when I took the approach that we sort of discussed earlier, where it's like, if I take profit on an altcoin, even if it's into Bitcoin or whatever, I take my 40% out to USD and that's it. So I never take, like, even if I sell back into Bitcoin, I then sell enough to cover the profit into dollars. And you have to, in my opinion. And I overestimate, you know, and listen, like for me, it's the highest tax bracket. For some people, that might be 20%. For some people, it might be 15. But the thing is, what you don't know in January is how rich you're going to be in December. Like we maybe learned that last year, right? So if you're only taking out 15 or 20% for the whole first half of the year, but all of a sudden you're kicking into higher tax brackets by the end of the year, you're going to owe the taxes on those early trades. So I think you really have to just approach it as if you're in the highest tax bracket and take enough out. And you can always put it back in later if you need to.
Absolutely. And I think that's great advice. You know, I think we both probably had, you know, friends, colleagues, family members that have had their own horror stories of, you know, I've been trading crypto, you know, it's not taxable. And then you kind of get into the next wave of I'm trading crypto. It is taxable, but they'll never find me. And I think that's kind of the you know, the next journey that we're going in now where, you know, we're seeing the IRS, you know, change the, go ahead.
But yeah, I think it's really important to realize they may not now, but if they fix all this in 6 years, you're still going to owe. If they like come up with some fully automated system that tracks every wallet that's ever existed for the last 6 years and they hit a button and that becomes some like machine learning, you still owe taxes. Just because they didn't get you the year that you did it doesn't mean that you're not going to owe it down the road. So
yeah. And you got to think, you know, the government's very good at getting, you know, the additional fees, the additional penalties. So it's not like you'll owe what you should have owed. You're going to owe that plus XYZ, whatever fee, whatever.
you'll spend so much money trying to figure out what you owe as well, going back through all of that and hiring accountants and lawyers. And it's just not worth it. I mean,
Yeah.
I would honestly, it sounds insane, but I would rather slightly overpay my taxes right now and know that I did it right, or, every single penny, and not even try to squeeze a dollar out. And sorry, I mean, if I didn't live in the United States, it'd be amazing. Like, I would have so much more money, but I live here and you can't leave. I love when people are like, just move to Portugal, dude.
Yeah.
We don't pay taxes. I'm like,
yeah, but you have to pay a huge tax to get out.
You pay a citizen. So first of all, Americans pay taxes on being a citizen, not on what you actually get from it, right? So no matter where you live, as long as you're an American citizen, you owe your full taxes, and you may owe some taxes in that country. So it's not like just because you're not getting the usage of the bridges and roads that you're paying for that you don't have to pay taxes. Yeah. B, you have to renounce your citizenship to cancel that, but you're still going to owe taxes for like 10 years after you renounce. And yep. C, if you're over $2 million in assets when you leave, the like luxury tax to be able to renounce is so prohibitive. The only thing an American can do is move to Puerto Rico and pay 4% tax. The only place you can go, but you really have to move to Puerto Rico. They don't play the I bought a house and whatever game. I've explored it all. There's no getting away from Uncle Sam.
Yeah, no, I mean, you got it right. I mean, I think for people who are interested in that, there's a Digital Gold, the Nathaniel Popper book that does a pretty good rundown of Roger Ver and his escapades trying to get out of the U.S. and the significant amount of capital he had to pay to get out of it. So, it's definitely, we are a tax service and accounting service, and obviously would be more than happy to help anyone who's listening with their accounting and tax. But, take it from, Scott and other people that we've had on the webinars, this is something that you can avoid. And we're definitely seeing increased IRS enforcement, not only moving the questions to the top of the 1040 this year, which every U.S. American and tax professional is now going to have to check off under perjury. If you check no and you had you interacted with crypto, it's probably a big no-no. And there's going to be additional resources developed from the IRS to go after and persecute people that don't pay their crypto tax, just like there is for income tax or capital gains tax or any other type of tax evasion. So definitely better to get everything situated and handled. And as Scott mentioned, with ZenLedger, we do a lot of the automation and work for you. So you can simply import your exchanges, import your wallets, import your DEXs, import any sort of DeFi activity you've had. And then we'll kind of be able to do a lot of the groundwork for you, and then spit out your nice clean tax forms that you can either file yourself. Yeah. We have a TurboTax partnership where you can import right into TurboTax or invite your accountant in at no additional cost to you or them. So definitely ways we could help you out. I know you
guys can take any wallet, which is incredible. Because that was a problem coming into last year when everyone started using these DEXs. It's not like you can just send your Bittrex, spreadsheet and call it a day. It's every single thing that goes into or out of your wallet has to be properly associated and accounted for.
Yeah.
I mean, it's really like I said, it ended up being 11,000, I shouldn't say 11,000 trades. It ended up being 11,000 transactions that we had to account for in my account last year.
Yeah.
Because I was also paying people in crypto. I have employees that I pay in crypto, but I have to report that as if I paid that, and it has to be pegged to the dollar amount at the exact moment when I paid them. It's really intense.
It's complex, but hopefully we can
take simplify it tremendously.
The complexity out of that for you and some other traders. I know we have roughly 6-7 minutes left, and we have
I mean, it's up to you. I'm fine, but I know you had questions. I would love to get to them. That's fine. Yeah. I'll answer them all. Yeah.
Yeah, if you're down, let's open up.
Yeah, we can go over
and see what we got. Give me 1 second. See what we got in here. And sometimes we end up covering them throughout the talk, so we'll see. Can Scott please repeat what company he's involved that would compete with Grayscale? I believe that was Valkyrie.
Yeah, it's called Valkyrie. There's quite a few people file. I mean, Van Eck, we saw the CBOE even kind of put the boot on the SEC's neck and said they wanted to start trading a Bitcoin ETF from Van Eck, which has been applied for even after Van Eck has been rejected a few times. They were just early. When you file for an ETF, you have 3 years to pull it. And so a lot of people who filed in 14, 15, 16, the market just wasn't ready. So they had to pull them. But now I'm pretty confident that one will be and we're seeing GPTC's premium has gone negative the last couple of weeks. It's a crappy product that people were taking advantage of. And now that there's competitors, I read today, I believe that it's the Canadian ETFs that are taking all the money out of Grayscale right now. People are just you don't pay as much of a premium to be a part of it. So they're reallocating their resources. But yeah, Valkyrie is the one that I'm personally involved in.
Yeah.
As an investor solely. Yeah.
I think we saw what two or three, I think two new Canadian ETFs come on the market in
Yeah.
the last couple months. So definitely seeing some
Yeah.
heat, some competition heating up in there.
Yeah.
Any recommendations on coins to buy in March and April? I think there's one as a disclaimer: this is not tax, accounting, or investment advice. So do your own due diligence. Make your own decisions for you. Maybe instead of like specific tokens, we can give
Sure.
general concepts. Like, do you
Yeah,
think
I would never give a specific token, to be honest, because it implies that I have a crystal ball and can tell the future. And I think it's important to understand, no matter how good a trader is, investor, whatever, everybody's just guessing. And everybody's situation, why they take a trade, why they buy something is different. That's why, like, you can't go on Twitter and see everyone talking about something and then you buy it. And then 2 months later it's down and you like start blowing up this guy's Twitter account. Like, why didn't you tell me it was going to go down? A, they didn't know. B, they might have already sold. C, their stop loss might have fired. D, they might have never bought it in the first place. You're responsible for your own financial decisions. Do your own research and figure out what you want to buy. But like I said, at the very basic level, I just start at the top, like buy Bitcoin. Forget about it for a decade. I think you'll be very happy. I don't know. Like I said, I can't tell the future, but like your approach to this market should never, like, I can tell you already, you're approaching it wrong by thinking like what's going to be good next month and that's not how investing works. Investing works because you put away money and you don't touch it for as long as humanly possible. That's the way investing has worked. That's the way people have accumulated wealth since the beginning of time. So like, what to buy in March? I don't know. Are you planning to sell it in April? Are you planning to sell it in June? Planning to sell it next year? 10 years, right? It's a question that's completely individual and depends only on your own management. There are plenty of coins I like, but I might not like them by the time you buy them. So it's not something I can offer. Yeah.
Yeah, no, I mean, I think that's great advice. There's always so many different variables at play that go into that decision that, you kind of have to run down your own checklist and figure out, what type of income do you have? If you buy this and it goes to zero, are you going to be okay? So there's a lot of different things that go into that type of question. And, I think a question that is very similar in nature is, how much is Bitcoin going to be at the end of the year? How much is Bitcoin going to be in 2 years, in 5 years, in 10 years? So it looks like we have a question that's, what's your timing and price on BTC cycle top? So I think we've seen a little bit of a retrace now. So maybe we'll frame this question as more of, in your opinion, what do you think we see as maybe the high for 2021, and maybe what does the price look like on December 31st of 2021 for you?
I hate making grand predictions because they can only make me
We're
look
gonna-
bad.
we're
There's
gonna
like,
hold
it's
it-
like a, no, I'm saying, no, yeah, it's like a 1% chance that I look good if I do that. I'll tell you this. I actually, my assistant and I went pretty deep down a rabbit hole. There's something called the parable of the ox, right? It's a famous thing where at a fair, a statistician, we're talking about like thousands of years ago, they weighed an ox and everybody got to guess how much the ox would weigh, and the person who was closest won a prize. Individuals are horrible at making predictions, but when they averaged out the 800 guesses, they were within 1 pound of the weight of the actual ox. So what we did, and what others have done, is we went out and found every Bitcoin prediction, Citibank, Plan B, like from people who saying it's going to zero to people saying it's going to 1 million, and they averaged out. And someone else did a very similar exercise at about $230,000 for the cycle top, $230,000 Bitcoin. I know that sounds crazy, but it's only like a 4 or 5x from here. We did like 13x in the last year already. Yeah. I don't know when that happens. I don't know if the cycle is 3 years, if the cycle is 3 months. I can say that I'd be pretty surprised if we didn't see 6-figure Bitcoin this year, because that's merely a 2x. And my feeling is not that we've topped. I have no idea what will happen, but I think, rationally I think we're just at the tip of the iceberg of institutional involvement. Michael Saylor just had 2,000 companies come to learn how to buy Bitcoin. We haven't heard announcements from any of them. If 5% of them buy, that's 100 companies. Price has gone from 10,000 to 58,000 on like 5 companies buying, right? So I just think rationally, to me, fundamentally, it makes sense that there's less supply and there's more demand, that price should go up. How high and how fast, I have no idea. I think it's early to be talking about $1 million Bitcoin, but I do think that is in the future. But like I said, I'll be here in 20 years when that happens, if it does. I don't care. Yeah.
Absolutely. No, I think that's a great way to frame that answer. Looks like we have, 3 or 4 more. One that we kind of touched on earlier is, how do you take profits? I always feel like the HODL principle, hold on for dear life for those who don't get the reference, is get as much BTC as you can and don't sell. But when we're at 58K and it goes to 41, I feel like I missed out on a ton of profits, but not sure the best way to approach that. So now we touched on, there's a few different concepts at play of, obviously the taxable event of selling at the top, or selling and, realizing that 17K in profits. We've touched on the fact that I think we both, and many people that have been in the space for a while, believe that BTC will continue to go up in dollar value. But I think something that a lot of people don't think of as well is, looking at the profits from a non-fiat perspective. So one thing that we like to talk about is, being so early that we're still measuring these things in dollars and not in Bitcoin. So I think we'll start seeing when, in the next 5, 10, 15 years, that the things that we're measuring in dollars will be starting to be measured in Bitcoin. And because of the scarcity with Bitcoin, especially, just because this question specifically mentioned Bitcoin, I think the scarcity element of that, in my opinion, I think, holding your Bitcoin and keeping to accumulate that is typically kind of the name of the game. And as Scott mentioned, getting in and out of altcoins and taking profits there, but then reallocating that profit back into Bitcoin is typically a good strategy. But, I don't want to answer the question for you. So I don't know if you have any.
I think I think that's the gist, but I should say that more granularly. And I see people are saying like, hey, we haven't talked about trading, like whatever. We have, because this is all the core of what trading is understanding that investing and being slow is the best way to actually be a trader. In my opinion, day trading is going to get you destroyed. But is that I love to scale into everything and scale out of everything. Right. And I think that if you take profits slowly, especially on these altcoin trades and stuff, every single time you sell something, you take more pressure off of your future decisions. And so I start scaling out very early. If something's up 10%, I mean, I use levels on a chart, but if something's up, let's say 10%, I sell 10% of my thing. And when it goes up to 25%, I sell another 10%. So I'm taking profit the whole way up. And by the time it's like literally gone bananas, I've probably got 20% of my position left, which I keep sort of as a moon bag, but I've taken profit the entire way. And I take that profit, as I said, in a split of dollars and Bitcoin. Usually with altcoins these days, it's right to dollars. And now I'm buying a little more Bitcoin just because I'm a lunatic and I want to buy the dip. But in general, like, I think if you're going to be a trader and you want to actually rely on the money as much as it hurts, you need to take money out. Like, if trading is your job, you have to pay your bills with your job, right? I see a lot of people talk about being professional traders who then will say like they never cashed out anything. I don't understand how is that your job, and how did you pay your bills if you never cashed out? I think it's very important emotionally and financially to ring the cash register and take profit sometimes.
Yeah.
And that's much easier now when you can park it in USDC for a while until tax time and actually make percent. It was a lot harder in 2017 when you were literally selling the dollars. You're like, I don't want dollars, I want Bitcoin. It's a very different experience now, knowing that you can get that. But I would say that the best way to do it is just don't view everything as a binary decision, which is how a lot of traders approach it. It's like, I bought it all and I need to sell it all. If you're questioning whether you should sell right now, sell 10%. Just sell some, and then you'd be happy if it continues up. And if it goes down, you'll be like, wow, I'm glad I took some profit. It kind of just, like I said, it takes a lot of the pressure off. And also you just need to realize gains. If this is like what you're going to do, you can't just stay in it. I think you can stay in Bitcoin for a very long time. But like I said, Bitcoin to me is a savings account. I really view the store of value aspect of it as the key. But if I'm going to live my life, I'm not going to do it from my savings. So I also have to be taking profit to live my life, so it's a balance and it's different for every person. But I would say just very important as a trader investor, like I was talking about, if you're going to dollar cost average in, you might as well sort of dollar cost average out as well, scale in, scale out.
Yeah, I think that's great advice. One thing that we always get, especially on the tax, on the profit side, is really, how do I roll over a 401k or can I use a Roth IRA type product to, try to minimize those taxable events and try to, keep the value of my holdings as long as possible. So I believe they're mentioning iTrust Capital, which is a really great team here in LA who provides an IRA type product. Are there any other ones that you would recommend, whether they're like 401k or IRA type products that that investors can look into for more longer term trading activity?
Sure. So obviously, I mean, for anyone who doesn't know, these are basically retirement accounts, and they're tax deferred until you retire. So basically, most people invest in a 401k or in a Roth IRA or something very slowly, but there are people who view it as a vehicle for trading because you cannot pay taxes or any short-term capital gains on the trades within it. I do have a self-directed IRA with Kingdom Trust, which is a competitive company to the one he's talking about, I'm assuming. And you can you can buy like cattle and land in your IRA there. The problem with a normal IRA, a Roth or whatever, is you're restricted to the assets that the SEC says basically you're allowed to trade within that, and Bitcoin is not one of them. But in general, they're incredible vehicles. But it's like you can basically put $6,000 a year into an IRA, tax deferred, and do whatever you want with it, and tax free until the time it comes to cash it out. But you also pay a penalty if you cash it out before you're 65. So you better be sure when you put that money in there that you're not intending to take it out for the next 30, 40 years, depending on how old you are. Yeah. But yeah, Kingdom Trust is the only one that I've actually used or been a part of myself. So that's the only competitor I can talk about.
Yeah. They got a great team over there. Definitely something to look into. This question is, I realized substantial gains in the recent crypto run-up. What is the best way to turn my gains to USD fiat? So somewhat confusing in the sense that did you realize gains with crypto and, you took the money out back into crypto? So not quite sure how to answer this one directly, but I think we kind of touched on, getting in, getting out, whether it's dollar cost averaging in or, taking 10%, gains along the way. There's different ways to kind of take out those gains. Market's calling, there's as we talked about crypto profit, there's profits on the way. We talked about realizing gains. I think we kind of covered this question throughout the last hour or so of how to realize gains, realizing gains within fiat, realizing gains within USDC, and how to kind of think about that. So if you haven't, gotten the answer to that, Scott and I both are pretty active on Twitter, and then, we'll have this recording on the webinar recording, live on our website in the next couple of days as well. So Scott and I are more than happy to answer any questions around, how to turn gains into fiat. And I guess this looks like the last question here. Do you guys have any recommendations on where one can stake ETH to get the highest percent and in the most easiest way? So I guess that's a question of, for the, average investor, do you recommend going into, ETH 2.0 staking, or is this more of a question of putting ETH into like a Celsius and Nexo and earning interest on them, or, maybe you can have.
There's so many ways. There's so many ways, and it's so individual. I mean, I didn't put my 32 or whatever into ETH 2.0 because it's really indefinite, and like, who knows how long and what's going to happen. I view it as somewhat risky. When is ETH 2.0 coming? I don't know. The only part that they've done so far is you can stake the ETH, right? I think that the same way we talked about those other platforms, they're very good places. You're not going to get 9%, but I think you get 5-6% staking ETH on, Voyager, BlockFi, these companies, Celsius, sort of, as you talked about. And then there's people who go further down the rabbit hole into yield farming and do it on these other protocols and stuff. That's Aave. There's a lot of them, but that's really beyond my pay grade, honestly. I've just never tried it. And so I don't want to advise on it as if I have. I'm kind of a noob in that world. I stick to the ones that I know.
Yeah. No, I think that's great advice. I think that's a common thread that we've talked about on today's, episode or webinar is really, do your own due diligence, test out some of these products and really try. And, one thing to keep in mind is that yield does not come without risk. So if someone says that you're going to get a risk-free yield, you should probably turn the other way. So the amount of yield that you're making typically, is associated with the amount of risk that you're taking as well. So you're seeing a 9% or a 15% or getting into some yield farming and DeFi mechanics. You can get into the 30, 50, 100%. There's 1,000% APYs in DeFi, but the higher you go on that spectrum, you're typically you're going just as high on the risk spectrum. So make sure that you don't invest more than you're willing to lose. make sure that, when you're investing and trading, that you're using a tax automation software like a ZenLedger, and make sure you're listening to really smart people like Scott, who have been around the block and have made trades, made investments, and know what they're doing and know what they're talking about. So I know we went a little bit over, so I appreciate you sticking on and answering some questions. It's been a really fun time speaking with you, Scott. And for everyone that's attending, as I mentioned, we'll have the recorded webinar on our website, and probably we'll distribute that across social in the next week or so. And then, Scott, do you want to give maybe your Twitter handle or ways that people could reach you if they have follow-up questions?
Sure. Just at Scott Melker, SCOTTMELKER. Everything branches from my Twitter, so you can just find me there. As you said, I'm pretty accessible when I could get to the 7,000 messages, but I try.
He's a busy guy, and that's why we really appreciate taking an hour out of your day and helping us share some knowledge and wisdom to our audience. So, Scott, it's been a pleasure having you on, and really appreciate your time. The last thing that I would add is we are also offering a discount code for ZenLedger for being a webinar attendee. So you can use the discount code webinar15, WEBINAR15, for a 15% discount. I believe it'll be through the next 24, 48, 72 hours. So definitely something to act on quick. We have roughly 6 weeks left in tax season, and as Scott mentioned, you definitely want to make sure you're getting squared away with this stuff earlier than later, and using a tax software like ZenLedger to get everything squared away. So, Scott, once again, really appreciate you coming on, and if anyone else has any questions, Scott and I are both on Twitter, and we have our chat support here at ZenLedger as well. So, Scott, it's a pleasure.
You guys are amazing. You've given me a lot more than the 1 hour I've given you guys back, so I appreciate that.
We're trying. We got white glove service, whether you're the Wolf of Wall Street or whether it's your first trade in investment.
I didn't even tell you. My assistant, who's very just out of college and stuff, he was like, "Man, you should talk to." And I'd never talked to him about it. He's like, "I talked to this guy Dan at ZenLedger, and he was so helpful with my account." I was like, "Wow, it really is true." He probably didn't know he was affiliated with me at all, and he's a small fish. You totally, you guys helped. You personally helped him out.
Hey, it goes top down. I think that's something that sets us apart from another competitor, is having that in-depth customer service, and having Pat and I, CEO and COO here at ZenLedger, are stepping into the inbox 24 hours a day. So if you have a question, comment, concern, just need some help on your crypto taxes, we're happy to help. We also provide tax professionals on staff that can help you with your crypto and non-crypto accounting. So if you have an IRA, if you have stocks, bonds, equities, commodities, a W-2, a K-1, and you have some crypto income or crypto trading activity, we can help you out there. So enough shilling ZenLedger. Appreciate you coming on, Scott. And
thank you.
And it'll be a wrap for us. Thanks, everyone.
All right. Thanks, guys.